What is good, guys? It's Rey-Jay back with another video, and in this one I want to talk about why tomorrow is going to be a very important day for the tests for the market. I'm going to break down some important levels to watch for on SPY and talk about how on earth the overall FOMC minutes may affect the market moving forward. But before I break anything down about what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of tickers out there, let me just mention a couple of things before starting. I'm firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And finally, don't forget about the Webull link. The offer ends very soon. If you deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon in just about 5 hours, so check it out before they run out. This is your last day to sign up. But anyways, now let's talk about the market. How on earth are things looking? Well, looking at the market, okay, we had a very, very interesting day today. We ended up starting off with a little pump in the morning. The market tried to push up to about 444, which is the resistance we talked about. Then we were just basically range bound for the first couple of hours. Then as time went on, the market started selling off just a little bit as we approached the FOMC minutes being released. And then once they came out, right, once the minutes ended up coming out, we saw the market bounce a bit. The market was just kind of trading sideways, got this little bounce. And this right here was kind of like our last point of support, which became resistance before the market got this rejection. And then when the market started taking in all the data from the FOMC minutes, we got this big sell-off all the way down to 439, and SPY broke below 440. Now, that's not really a good sign since we are closing below 440, but I want to warn everyone that you shouldn't just trust what happens in the very beginning, and you have to wait for that confirmation the next day. What do I mean by that? So there are sometimes times, I'm sure you guys remember this or noticed this, where Jerome Powell would speak, right? You guys remember this? And the market would sell off, right? But then the next day would come and the market would just bounce. So sometimes things like that could happen. There could be a lot of trickery. So what I want to talk about is how we have to look at which levels hold tomorrow and which levels break. Once we see which levels break, that's going to give us a good gauge of what is more likely to play out. And I believe even though the technicals do look weak for the market, even though there's going to likely be downside in the future, yes, we need to be open-minded with these FOMC minutes and all this data coming out because you never know what they're going to try this time around. And that's why I want to talk about some important levels to watch for on SPY to see if it holds or breaks. That's going to help you know which way the market's going to go. But before I talk about that, we have to talk about what actually happened with the minutes and then all this other data before I talk about the charts in just a couple of minutes from now. But looking at the minutes that came out, the Fed officials have talked about how they see more upside to inflation. If you guys haven't noticed, gas prices are going up again. And with that happening, energy, the entire sector of energy is starting to increase, which is going to affect other sectors. On top of that, the Fed is attributing a lot of these increases in inflation and more potential for it to happen to the unemployment numbers being relatively low and strong looking labor numbers. So the Fed is arguing that they have to cause more pain in the jobs sector. They may have to continue to raise rates as a result of it to bring down inflation because of this high spending. And if they don't end up doing this, right, there's a risk of inflation maintaining a higher level for longer. Now, could they be right about that? To some extent, I guess you could say that, but I do believe the Fed has an exterior motive in hand, and that is basically them trying to cause this giant reset in the job sector. That's what one of their main goals is for many different investors as wages are continuing to go up in this economy. They want to do this as businesses are once again in need of a reset, and they're doing this because it's all part of their plan. Now, with the Fed doing things like this, yes, they're most likely after a reset. Even Jerome Powell spoke about this in the past, but they're saying that the reset has to happen because of inflation, right? They're using inflation as an excuse or the main reason. It could be true. There's some truth behind it, but not entirely. There are many other factors that affect like inflation from supply chains to not to mention, what happens with spending and etc. Spending could also be impacted not just by employment, but the psychological impacts that the current effects that the Fed has on end up having. So if the Fed keeps talking about like a potential recession, or if things are getting harder, they warn investors to save their money, that could also slow down spending, right? It doesn't just have to be through the labor market. But anyways, going down that route, it doesn't really matter at this point because the Fed is still pretty fixated on raising rates even more. And if they continue to do this, right, this is once again bearish for the market. It's really plain and simple. But my only question is, now that the Fed is just giving us more information from the minutes and more of their officials are open to raising rates, rates. Will the market start pricing in another rate hike for the September meeting, or will the market end up just not doing that and just waiting it out? That's what we're not too sure about just yet. We'll see what happens tomorrow with the big reaction in the markets for that reason. Now, looking at some more data, looking at the fear and greed index, the market used to be quite greedy, extremely greedy. Now we are neutral. The market has shifted a lot, and we're getting closer to the fearful side. That is going to be very important. Now, market momentum is becoming less greedy, starting to downtrend a little bit. The stock price strength is dropping as well, not as greedy as before, getting closer to that 0% level. And then we're starting to get the McCullen Volume Summation Index, dropping as well. Greed is just continuing to subside. And the put and call options positioning right now is more in favor of the fearful side, as we're starting to see this big surge right here in the put to call ratios overall. And the market volatility right now, the overall market volatility is becoming a lot more fearful as we're seeing the VIX continuing to hold up. Now it's holding above its 50-day moving average. That was one signal of this, and all of this is still suggesting there's fear in the markets and still a possibility of more downside. But for there to be more downside, we have to watch the market break particular levels, and we're going to see that tomorrow. Now, as far as earnings go, one thing that's worth noting is that Target had earnings today, and they basically beat on earnings, which is good, but they also mentioned that their year-over-year sales should be declining. And they're telling us that there may be some hardships for them as time goes on. So the same thing could happen to Walmart tomorrow morning. If that's the case, this could just lead to more fuel for the fire. We'll have to wait on that. And then on top of that, we also have like Ross tomorrow after the market closes, and nothing else that's too significant or huge, just some more retail. But what else is going to be big is going to be initial jobless claims. We're going to have to find out how this affects the market tomorrow. We want this number to be a little bit hot. We don't want this to be too low. We want this to be very close to what the forecast is of at least 240,000. If this is too low, this could be bearish for the markets because the Fed is going to be incentivized to be more hawkish, and the market could start pricing in another rate hike even more if we keep getting relatively weak jobless claims. We want them to be stronger and higher. If anything, we want more pain in the job sector, a softening of the labor market. Now, if the numbers are the opposite, this could have another effect on the market. So make sure you're ready for that. Expect some volatility 1 hour before the market opens. And besides that, the data really cools off from there. We don't have too much coming out for Friday or even for the end of Thursday. So we have to be open-minded. Look at the market, okay? It is evident that the market's looking weaker. The daily chart on SPY is looking weak as we close below the 50-day exponential moving average. On the 4-hour time frame, the same thing happened as we actually broke below our 200 EMA, and the market is continuing to weaken. So could we get a cross right here on the 4-hour 15-200? That's a possibility too. So not looking too good. We do look weak for now, but we have to see what the reaction is going to be to this FOMC minutes release, because this wasn't really like too crazy news. It wasn't that insane. We kind of like knew most of this already based on what Powell said. So could this be kind of like a fake out move for them to try to get the market to go up, at least just a little bit? Or are they going to continue to rug pull the markets tomorrow specifically, right? Because what happens is there is trickery in the market with all the puts expiring. And then on top of this, you have to remember that the first move is not always the true move after the FOMC meetings or the minutes. So we just want to watch for confirmations just to be safe. And here's the answer, okay? Tomorrow, if the market bounces, just hypothetically, right? We're just going over these hypothetically. You're going to be watching 440. If we hold above 440 for an extended period of time, we could retest 441 flat at the 5 EMA. And then 442 could come. If we break that, then 444 is a possibility. That's the bullish case. The market just trying to bounce from here, because you could argue the market is oversold and is due for it, and that the Fed didn't announce anything too crazy. Now, if we get some kind of like bounce, let's just say we do try to bounce, because I'm anticipating that for like either a gap up or like in the morning. But if we reject off 440, or 441 or so, or wherever we end up rejecting, and we end up just seeing the market reject and come down, you're going to be watching, can we hold above 440? If we break below 440, and this is the more bearish case, okay, you're going to be watching 439.39. If that breaks, if we continue to sell off, you're going to be watching the market come all the way down to these levels right here. I would not rule out the possibility of 437. 436.8 to 438 is where we have some support, very close to 437. That zone right about there, that is going to most likely come if we continue to sell off pretty hard, because this is looking like a head and shoulders pattern. And once again, there is room for downside, and the technicals do look weaker in my opinion. All right, so be open-minded to anything just to be safe. What seems more probable from a technical standpoint? Obviously, it looks like the market may try to rebound tomorrow, seeing how we dropped just a small little rebound in the morning, or maybe we gap up into the low 440s, 442 or so could be retested, and then a rejection very close to between 442 to 444, and the market comes right back down. And it could even sink even lower down to like 439. We'll see if that breaks or not. That seems more probable, like a little pop than a drop, and the market coming down to even lower levels potentially. But just to be safe, we're going to be watching this low to see if this holds on SPY tomorrow. And if we keep selling off, then it is what it is. Watch the levels just to be safe. Always be open minded to anything because there is a lot of trickery in this market. For Tesla, we're going to be watching, can Tesla get above 227.27, above our 5 EMA? If it manages to do so, you're going to be watching 230. If Tesla could break 230 and hold above it, we have the potential to push up to about 234.5, maybe a little bit lower, depending on where the 20 EMA happens to be at the time. And then 235 above that. If Tesla could do that, there's potential for it to try to bounce. That's the bullish case. The bearish case is going to be it breaking below the low we have at 224. If that breaks, you're going to be watching 221 on Tesla. And if that breaks, we have these other levels such as 217, 215, and much lower levels for Tesla. How's it looking so far? Well, we had a very, very aggressive sell-off at the very end of the day. So I'm going to be anticipating a little bounce either during the pre-market or by the time we open. That seems a little bit more probable. Of course, the news is another factor. I can't really predict that perfectly, but it really depends on a lot of factors. So the market may try to get like a rebound. I think it, from a technical standpoint, seems that way, but then we may get a rejection off either like 227 to 230. If Tesla does get that rejection, starts coming down again, then there's a good chance it could retest the low we made at 224. And if that breaks, then Tesla's going to fall to the low 220s. But just to be safe, watch and see if it actually breaks, just for safety. Okay, that's the most unbiased way I can tell you that. And always be open to anything after the FOMC minutes are out, because once again, the move could be delayed. Always be open-minded in a market like this, but once again, technicals do look weaker. So my target on Aapl in the morning was 176.5. We actually went down to about 176 today in the after hours. So it did end up coming down eventually. And on the 4-hour time frame, it's looking weaker. It's not looking the best. So we're going to be looking for, two possibilities, right? The bullish case would be this thing trying to hold above 177 and pushing back to 178.11 and then breaking above that. The bearish case is going to be it breaking below 176 and coming all the way down to 175. Then we have 174 below that, 172.5, then like 170 flat. All these very, very low levels. What do I think is more probable for Aapl? It looks like it may try to get a rebound in the morning, maybe retest 177 or so, at least as of right now. Of course, the news could affect it as well. We just have to wait and see on that. And we're going to see if it could try to hold above 177, then, retest 178. It doesn't look like it may do that. It looks like it's kind of weak to do that. But there is a possibility of it getting a small little pop in the morning and then another drop as time goes on. And if it does drop, we're going to be watching, does it hold 176? If that breaks, we could easily see this thing come all the way down to like 174 or so. That is most likely realistic and very probable based off technicals, but I'm always open-minded nonetheless. For the QQQ, you're going to be watching this thing rebound and retest 364. If that breaks, 366.8 is a possibility, then 368. Now, if you're bearish, you're going to be watching it break below 362. If that fails us, you're going to be watching 360 and then 357 below that. Those are the key levels based off historical trends, especially like down here at this level right here. 357 was the previous support. So we're going to be watching a lot of these levels just for safety, just to be, as clear as possible. What do I think is more probable? I'm going to actually close these just to show you guys the most simple way of looking at this. We may get a rebound tomorrow. We might get a rebound. We might see the market make an attempt to rebound the pre-market. We're going to be watching 364 or so, maybe a little bit higher. 365 can be retested as well. The previous support right here becoming resistance around 365. We might see the QQQ reject off 364 to 365, then come right back down to about 362. And we'll see if that holds or not. If that breaks, then we could see 360 and potentially 357. Just to be safe, and let me be honest with you, it does look more bearish from a technical standpoint, but just to be safe, we need to see what the real reaction is after all of these minutes just got released. Now, Nvda is not looking the best. We're about to get a bearish cross on the PPO, but just to be safe, let's see the reaction. If you're bullish, you want to see it hold above 438 right here, the 50 EMA. If it holds above this, it does have the potential to rebound to about this entire like chop zone to about 445 or so. If that breaks, you could be watching 452, then potentially even like 455 and 460 above that. That looks like very unlikely though, looking at the current trend. And then the bears are going to argue that there's 430 on Nvidia, and if that breaks, we have 425, 420 to 421, the next support below that, and even lower levels after that. So we have this like previous resistance becoming support around 425. If that breaks, then we have 420 or lower for the chart. What looks more likely for Nvidia, in my opinion? Okay, so I went over the more bullish and bearish cases. What seems more probable is this thing kind of like popping in the morning after selling off like this, popping to retest 440 or so, and we're going to see if it could hold above 440. If it fails to hold 440, which I think is very probable, it might reject off that and start coming down. We could see it come all the way down to 436 again. If that breaks, 430 is on the table for the 200 EMA test. That seems very probable in my opinion, as we're seeing weakening momentum on it. But just to be safe, let's see if we could try to break this low that it has. If that happens, 430 is a possibility, followed by 426 to 425. And then, below that, we have like the very low 420s. But I'm not promising that it's going to drop that low. It really depends on how we open tomorrow and any news that comes out and factors like that. But based off technicals, it is looking weaker, especially after what the Fed just said. So just to be clear, we have to be open-minded and always be open to what on earth could end up playing out as well. Looking at Microsoft, this is also looking weaker. It's been downtrending quite a bit. It's going to be looking for a pop tomorrow, retest of like 322. If that breaks, 325 is on the table, but I'm really doubting it's going to go that high. I think 322 could be it or very close to that area. A rejection off that will take it down to about this 319 area. If that breaks, we could see 317 or so as the next important level. Now, if that breaks, we have the next, bearish level around 315 that could be tested on Microsoft. It's a possibility. We are looking a little bit more bearish right now on the PPO. So just to be clear, that is very probable, but we have to watch it to make sure once we get this test at 319. So always watch for confirmation just for safety. It's very important to go over that. For Netflix, it's the same thing, right? The bullish case, you have like 420, 423, and 425. The bearish case is going to be 405 followed by like 402, then 400. What looks more probable? It's looking weaker right now. It looks very, very weak right now. We might see it try to rebound to about 417 to 420, then reject off that, then come right back down to these lower levels below 410. And we could even see like 408 or so. But just to be safe, you have to watch these levels. On the NASDAQ, unfortunately, it failed to get much of a bounce. It's still looking weaker. Look for a rebound to about 13,586 before rejection. If it continues to reject, watch the low. If that breaks, we could see this thing get very close to this previous lows down here. We also have this level down here where this previous resistance was. I know it's a little hard to see, but 13,300 is on the table too if it does continue to sink. It is looking weaker, so it's very important to watch these levels. Looking at SPX, it's also looking weaker. We were talking about this level yesterday, 4,400 flat potentially being tested. Now, look for a rebound to about 44.32. A small little rebound is a possibility. And if it rejects off that and starts dropping, you're going to be watching 4,400 flats again. Could we hold that tomorrow? If it breaks that, it's going to be sinking a lot more. We have a lot more lower levels, such as 43.89 that could be tested. If that were to be tested, the market's going to sink. So be prepared for that just to be safe. For the VIX, this thing is continuing to hold up. It's getting a little bit stronger. We got a bullish cross on the PPO. We're going to be watching this test right about here. Can the VIX go up to about 17, or does it reject off this resistance and come all the way back down to the 16s? This is going to really depend on a bunch of different factors. We'll have to see how it moves tomorrow, but it is looking a little bit more bullish. It's trying to hold up quite nicely so far. You can see the bears were trying to hold the market up, which was about to bring the VIX down, but it's gaining a lot of wicks down here, which is a good sign for it. Just to be safe, always watch for confirmation. The dollar is strong. The dollar is looking stronger, in my opinion, continuing to break out. It's now actually trying to fight around 103.5. It looks more bullish. If it breaks that, it could get closer to like 103.75 to potentially 104. Those were some previous resistance levels. Breaking those, that's going to sink the market even lower, unfortunately. For Coinbase, you're going to be watching for a retest of about 79.5 to 80, then a rejection. If that rejects, this thing could start sinking to even lower levels, unfortunately. You're going to be watching, some of these low levels down here, such as like 76.5. That's going to be the next major support to watch for. Also 78 flat. If it breaks below 77.8, then we're going to be watching 76.5, and that's going to be the next level. For Google, if you want to see this thing rebound, you're going to be watching a retest of like 130. If it breaks that, we could see 131 technically, but I have a good feeling we reject off this resistance and come all the way back down to 128. And if that fails us, we have 127.32 as the next possibility. It looks like it might try to rebound and then come down. That seems more probable for it in my opinion. The 10-year treasury yield is continuing to climb. This is once again a bearish indicator for the market. It's continuing to hold up quite nicely. There's no indication of this thing breaking down just yet, thanks to the Fed. If it keeps breaking up, if it keeps going higher and higher, this could be bearish for the market, at least historically and technically speaking. And we have to be careful now. It's looking strong right now. There's no sign of it like breaking down. So just be very careful. That could be a bearish signal as well. Amazon came down. We were talking about this potentially yesterday. We're going to be looking for a retest of about 135.9 or so to 135 flat. Might retest the 50, then get a rejection. Maybe not the 50, maybe the 5 EMA, then reject off that. If it breaks this low, we're currently sitting very close to support. 133.66 is going to be support for Amazon. Previous resistance becoming support right here. If that breaks, you're going to be watching 132 as the next level. And then we have this imbalance down here around 129. If it breaks below the 200, you're going to be watching for this imbalance test around 129. For Meta, unfortunately, it's looking relatively weak. Did not get a nice bounce. Look for a retest of about 296 to 298. You're going to be watching this area right here. If it retests this, could this thing try to get back above the 200? If it gets above the 200, there is potential for it to get back to the 300s. If it rejects and fails to get above the 298.2 area, or very close to that, we could see Meta start sinking a lot lower. It is looking weaker from a technical standpoint, and we're going to be watching these lower levels, such as 290 flat and then 288 as important supports. And if those break, there's going to be even more downside. It looks more bearish as of right now, but just to be safe, we have to see what the real move is tomorrow after the FOMC minutes were released. So watch for confirmation and do what you have to do. With that said, I thank you all so much for listening. Have an absolutely spectacular rest of the day. Remain calm, cool, and collected, and do what you have to do. Market to the moon, because the long term is still very bright despite these short-term fluctuations. And please be prepared for possible downside, but watch for those confirmations just to be safe. All right, so thank you for listening. Have a great day. Market to the moon, and peace out.